All right. Personally, I am very excited to talk about this subject today based on your all's response. It seems like this is a pain point for property management companies of all sizes. And Jesse is quite the expert, so really excited to hear from him today. Our webinar is on mastering advanced reporting techniques for your hospitality organization. My name is Mary Roper, and I'm the marketing manager at Ximplifi. In just a moment, you'll also be hearing from Jesse Ehret, who will be walking you through reporting tips and best practices that you can be using right after this webinar and near into the future to keep your business running smoothly. So in today's session, our goal is to provide you with the tools to elevate reporting so that you can navigate trends and stay competitive in today's very data-driven marketplace. We'll briefly cover some background, identify who's the key audience for this webinar, so you know you're in the right place, address the call for better data management in the hospitality industry, highlight the benefits that leaders can gain from these practices that we're going to be discussing, and then we'll dive right into the specific strategies that you came here to learn. And then finally, we'll discuss some of the additional ways that Ximplifi can support you. And then we'll open up the floor to answer any questions that you have for us. Overall, we're looking at about a 45-minute webinar. So just a couple housekeeping items. We are recording, and so we'll share this with you and everyone who registered afterwards. Feel free to use that Q&A that you should be able to see. Yes, on your screen. So feel free to submit questions anytime during the presentation that they pop up. Either Jesse will address them on the spot or we'll go ahead and follow up with you during the Q&A. And then we have a couple polls, so just keep an eye out for those when you see them. Just take a moment to answer them. And without further ado, a little bit of background. I know we have a mix of attendees and people who registered. So for those of you who aren't familiar with us, Ximplifi is an accounting services and advisory firm, and we specialize in serving hospitality and property management companies specifically. We were founded in 2018 by a group of CPAs who have deep accounting experience, and they wanted to solve the accounting and financial challenges unique to the short-term rental industry. And so our mission is to improve our clients' lives and help them achieve better financial success by leveraging technology and providing exceptional managed accounting and finance services. So we really pride ourselves on combining expertise in accounting for vacation rentals with best-in-class solutions to automate and streamline your business processes. This made us one of the first accounting firms to specialize in the industry, and currently we're serving over 100 vacation rental clients. That's encompassing 8,000 plus units per month. So we're growing quickly and already have a large base of big history in the industry. And now I will hand the reins over to Jesse to introduce himself and go over some of his credentials.
Yeah, thanks, Mary. I'll just reiterate, thank you everyone for joining us today to chat through, my favorite topic, which is taking all the data and reporting and looking and data analysis to help our clients better understand the financial performance of their business. And so I'm going to dive in today to Sage Intacct, which is a cloud-based ERP accounting platform that I originally got introduced to when I was a CFO at Cuvée, which is a client that we actually still serve in an advisory capacity today. So everything we're going to talk about today actually started with when post being a public accountant with PricewaterhouseCoopers, I joined Cuvée, that company, as a CFO, and was tasked with transforming their finance function, both from a technology standpoint as well as a people standpoint. And they're an incredible company, offer very ultra high-end luxury travel experiences in ultra luxury properties around the world. But when it came to finances, having a timely close, understanding the financial performance of their business, which was somewhat complex, including multiple funds, personal properties that they owned, as well as a property management company where they managed additional third-party property owners' homes. They needed to transform that finance function. So that's where I went through really a long process of doing my own due diligence and determining what was the best technology to support Cuvée at the time. And through that process, looked around and said, wow, there's really not a whole lot of financial and technology leadership in the finance space for this industry, and saw a good opportunity to take what I learned at Cuvée in the few years that I was there, and bringing that experience to the industry as a whole. So we founded Ximplifi about 5 years ago, or about 5.5 at this point, with that goal in mind. First, focusing on providing a good pool of resources where we can come in and be your outsourced finance team. But then underneath that, it was always built on helping companies understand and building the right technology stack to support their financial operations. And so we do that with a combination of Sage Intacct, which is the accounting tool we'll talk about today, to give us a little bit of deeper understanding. Again, this is, hey, if I'm growing beyond QuickBooks, and we also combine that with our own proprietary integration platform, VR platform, which we'll also talk about. So we can jump to the next slide. So the folks that are going to benefit from this webinar today are, hey, if you're a vacation rental management company that's either large and complex today, or maybe you're looking to grow to be a larger, more enterprise level of property manager, and you're wanting to understand better ways to measure your financial success, this webinar is for you. Also, if you have multiple business units or entities or business models, so what I mean by that is you might own multiple properties yourself. You might manage some sort of investment fund for maybe an institutional capital client, as well as have your own property management company. And perhaps you also have, an interior design company or a cleaning company in addition to your property management co. And so you're really looking at a way to streamline the reporting, bring all of that data into one place, have consolidated reporting and/or more robust reporting for those stakeholders that you're tracking the financial performance for. This is going to be for you, and/or if you're, CFO or decision maker, finance leader of a large and/or complex entity, any of the ones that we just talked about today. Hopefully, you'll really get a lot out of today's discussion. Certainly when we talk and we look at, hey, what are the challenges for today's small business owners, specifically in our industry? Technology is always at the top of the list. We field calls and every day with people that are trying to figure out, hey, how do they manage trust accounting? How do they combine that with KPI reporting and/or doing what we just helping companies with the structure that we just talked about, complex, multiple entities, multiple companies. How do I bring it all together? PMS, accounting, Airbnb, Stripe, merchant processor, et cetera. So certainly helping you understand how you solve that problem is going to be important. And also, having data at your fingertips and understanding the performance of your business is so key, which is where, especially in a growing competitive market, as we know, our industry has grown significantly over the last several years with a lot of new entrants into the marketplace as additional property managers. So how do you stay ahead of your competitors and create that competitive edge for your company against those people that are just coming in. Certainly understanding your financial performance is important to that. And then obviously too, our industry is constantly evolving from compliance to new regulations around VRBO and Airbnb, new channels, et cetera. Those dynamics continue to change, and so continuing to stay ahead and understand your business finances helps us make the business decisions necessary to drive our decisions. So certainly, as hospitality leaders, and in our environment, we think about AI and think about all the different things that are coming at us in a rapidly changing environment every day. Hey, how do we have the power to adapt and plan for the future? As I talked about, continue to have that competitive edge, understanding your financials, your cost structure, your cost per unit, things we'll be talking about later, clarity around your cash flows. How much cash is mine? Are we following trust accounting rules? Do we understand the relationship between how much money we're making and our rental revenue, our take rate? Something I'll talk about a bit later. Understanding all of those metrics to help us again understand our business, understand where we're going to invest, or maybe we're over investing, such as my marketing and advertising expense versus my payroll. What's my payroll by department? Payroll as a ratio to active units. All those things will help us as hospitality leaders or leaders of our business, again, drive business decisions. So, the things that we'll really dive into here are, we'll focus on Sage Intacct and our accounting software that we use for our larger complex. We certainly have plenty of companies that use QuickBooks. However, again, we're going to focus on Sage Intacct because of the power of the reporting and other tools that it gives us. So we're going to talk about that. How do we leverage statistical counts and/or ratios within our financial statements to understand the performance of our business? Being able to create reports that look at month over month or month over prior year month. Those items are going to be very important. We'll talk about that a bit. And then other strategies, which are tracking your expenses, tagging your expenses. It's probably, in my experience, is one of the hiccups that everybody has. Hey, how am I capturing and coding and deducting and properly charging my owners for all the expenses that have been incurred on their behalf? Again, understanding operational efficiency, but that's where we'll understand ratios within our financials. Monitoring our take rate. Basically, take rate is a type of ratio that we'll look at an example of, and then comparing KPIs like occupancy, ADR, and RevPAR. Most folks are probably doing this outside of their financial system, and even a lot of our clients that are using Sage Intacct today are also looking at this with other tools such as their PMS, key data, other tools such as that. But certainly we can take that a step farther. We can get that data within the Sage Intacct, and so we'll take a look at that as well. Give a real quick broad overview of Sage Intacct, but again, it is effectively, when someone is coming to us and they are no longer getting what they need from QuickBooks, and/or they've grown multiple entities, different business models, et cetera, looking at Sage Intacct to improve reporting across multiple entities, having better custom reports and dashboards and graphs, charts, et cetera. We can talk about owner statements. Generally, we do that with via our platform. But we'll also talk about just the architecture of Sage Intacct with different dimensions, such as tags and classes, and report writing that helps us, again, build that robust reporting to have a deep understanding of our business. And today's topic isn't about VR platform, but that is key to how we help and manage help our clients achieve really having one source of data or one source of truth for their data. And that is connecting the property management system, connecting merchant processors, also channels such as Stripe and Booking.com, and bringing all that into one place where also we handle AP, payroll, owner expenses, credit card spend, et cetera, all within one environment. Again, today we're really going to focus on Sage and how we structure to look at trust accounting and operations accounting in the same environment to produce both robust reporting and then ultimately, great owner statement reporting for our owners as well. Again, we're not going to focus too much on the owners today because today is about, hey, how do you understand the financial performance of your management company? Real quick, just talking about all the different integrations that we have today. We're adding more, hoping we have Logify coming real soon here, as well as Aventio. But today, we integrate with all of these property management systems: OwnerRez, Guesty, HostAway. We do connect with Airbnb, as well as Track, Hostfully, Stripe, Hospitable, and Booking Automation. We actually do have an integration with Booking.com as well. Really, we're using that more along the lines for same with Airbnb for getting payment data and streamlining and automating the payout reconciliations. Which, if you've ever done that, you know that it's complex, or not complex, but tedious. a lot of data. But also through VRP, we assist people in having a great owner statement portal, dashboard, summary statements, also some KPIs that are available to the owners. And then with year-end and 1099 filing, really with the push of a button, which tends to be very nice. All right, well, enough fluff. We'll jump into okay, cool. Okay, I'm going to take over the screen here and we're going to start sharing. There we go. You seeing it? Okay, great. So within Sage Intacct, it is what we call a multi-entity environment. So we can really have as many entities as we want. We have some clients with 30, 40 different entities where they have construction businesses, a property management co, apart hotel entities, investment funds, so a lot going on. Certainly you may not have that much going on, which is fine. Really what's key, and for most of our clients, they have a management co and then a trust co, even though technically these would consolidate as one company. We put them in separate entities so that we keep your cash in the trust entity for the trust and what's going to go to your owners. This is going to really isolate everything that goes on related to your owners, what you owe them, what you collect on their behalf, what's owed back to you as management co, et cetera. And then we have the management company, which is really your financials, your management commissions, your repairs and maintenance, maybe booking fees, any of those types of items, your payroll, et cetera. It's gonna exist. Very nice in that with multiple entities, we still only have one chart of accounts. So we have a standard chart of accounts that we start from, which obviously can be altered. But what's really great is as you add new entities, that those account numbers are shared across all entities. And so there's not a whole lot of maintaining a new or different chart of accounts every time you add a new entity. It's a shared chart of accounts across all entities. And then the last thing that I'll talk about before we get into the meat and potatoes of everything is the dimensions. Here we have various dimensions that we use. Certainly locations, which is going to be able to help us tag to the different properties. Also here you can see we've built a hierarchy that's looking at different regions such as Louisville, Nashville, Houston, et cetera, and the different properties for those the different properties that sit in those different regions. If we want to start breaking different reporting down by region versus just the individual properties. So again, typically our clients, we're working, not all of them, we do have some clients that don't use our API integration. They might be on a system that we don't support from an integration standpoint quite yet. And or maybe it's not an open API such as Escapia, Streamline, et cetera, one of those systems. Or some people say, hey, I don't, it's okay, I'm using Track, I don't need to connect via API, I'll just import my data, keep all my trust accounting in Track. So that's an option too, but a lot of our clients are going to connect their PMS if they can into Sage Intacct and bring over a lot of different data, which we can take any of that data and reports and put into a very flexible dashboard as we see here. This dashboard's it's all customizable. We can add here. This one's more financial focused. It does have room revenue at the top, both year to date against the prior year, and then the month, and my management commission this month versus the prior year. We can very easily add, adding an additional performance card, which is what those items at the top are for. So we can do management commissions year to date. And I'm gonna guess on which one is management commissions. We'll see if I'm right or not. But current year to date. So as we save that number, or as we save that, you can see here that we add in management commission. So very easy to add in different cards. You can move these cards around. That wasn't quite moving, but you can see here, very easily move things around. So pretty flexible from a dashboard perspective. And then I'll show you another dashboard here too, which is more, this one here is more rent focused. And so here we might have rental revenue by property or month, and then the trend and analysis of rental room charge versus booked revenue. But getting back to our financials, very key component for us to help our clients understand their business is looking at really two things that I focus heavily on with my clients, with our clients, where we're providing advisory level services. The first is that I think it's very important to understand our top line room revenue. Some people would like to look at room revenue, and that's what I choose to look at. Some people also look at total guest fees. But either way, looking at one or the other, then starting to understand the relationship of that room revenue to other parts of our business. Other items such as number of active units, another very key metric, which you can see here. We're actually keeping that in a, we keep that in a statistical account. So in Sage, you can have as many statistical accounts as you want. Whoops, that disappeared on me. But ones that we look at: employee head count, number of nights, number of turns, number of properties. Those are probably the top four metrics that we're going to look and we're going to track, and then use those within our financial statement and analysis. Here, again, you can see I've got my room charge up at the top. That helps me understand what's the room revenue that I'm collecting on a monthly basis. Then I can understand, hey, what's my gross rent per active unit? So in any given month, what was the revenue? You can see this particular client was very seasonal, having very high months in June, July, August, and then dipping down in our shoulder and off-season months. But then we also take all of this. We take other items of the P&L and we understand that by unit. What's my gross profit per unit? What's my OpEx per unit? What's my EBITDA per unit? What's my number of property turns, my guest nights, and then obviously my ADR, which I can also track. Again, might be other ways to track ADR and or RevPAR. But having it here to compare and contrast as another data point is a good place to start. From there, we really begin to build ratios that we look at. So a lot of times I actually don't look so much at the numbers as I look at the ratios of my total revenue as a percentage of my rental room revenue. For me, it begins to tell the story, especially if I look seasonally at hey, what's my revenue in my high months, which are June, July, August, September, and then also understanding that on a year-over-year basis. This really tells a good story that hey, my revenue year over year, my management fee revenue was almost exactly the same percentage as my room revenue. That helps me forecast and build a budget for my following year because I know that, hey, essentially wherever my room revenue goes, my management revenue should go in the same direction. So if this is going to increase by 20%, I can pretty much count on the fact that my management fee revenue is going to be 49% of that room revenue charge. So beginning to understand that, and here we see, you can dive into the individual components of that as well. Maybe there's areas where you think, hey, I can actually increase my revenue as a percentage of room revenue. Obviously you always have to balance that out with, hey, is that gonna decrease bookings? Am I gonna take revenue away from owners, et cetera? But still, it's all things that are really good to know and really good to begin comparing on a year-over-year basis. From there, we begin to look and track. I'll blow this up just a little bit. We begin to look and track our cost of revenue. I find it real important to understand and try to get into your cost of revenue all direct costs, such as like your pricing software. That's a direct cost. It's based on a percentage of the revenue that you generated for your owners and really ultimately the revenue that you generated as a property manager. So, hey, we probably should bring that up as a cost of guest services revenue or cost of rental services revenue. Certainly channel commissions, merchant fees, your direct costs associated with your repairs and maintenance folks, your direct costs associated with housekeeping revenue, supplies, laundry, linens, certainly your labor. And that means too, having a very good breakout and how you're recording your payroll. So to get a really good understanding of your margins and in housekeeping, for example, it's going to be important if you have people in-house that are on payroll that are related to housekeeping that, hey, we put their costs up in a direct cost account that is going to be perhaps tagged in a different account or tagged with a different department, such that we understand their direct cost associated with this cleaning and linens revenue. So again, it all comes down to having that broken out, having that in the right spot in our financials helps us begin to understand our gross profit and or some folks will always also look at this as well. They'll look at their total revenue as a percentage of total guest revenue. So that would be a take rate. I often will look and I'm focusing more on the gross profit, which is, hey, what's as a percentage of room revenue? So essentially, hey, for every dollar I sell in room revenue, what am I taking as gross profit that's going to flow to my bottom line? In this example, we had $38 for every $100 of room revenue flowed to our didn't flow to our bottom line, flowed to our gross profit. But obviously we dipped this year, going down to 36%. I know just by looking at this very quickly that, hey, a lot of that cost came into my cost of housekeeping revenue. Dive into that and understand a little bit more that this client invested in linens, bringing housekeeping in-house. And so they really had a spike in housekeeping costs this year, which we'll track closely in the following year. From there, getting into the various G&A costs, understanding each line as a percentage of your room revenue, again, is so key and important to understand. A lot of times, I don't focus so much on my cost increase year over year as I am more focusing on these ratios, because these ratios tell me a story, because this increased by $27,000, but I can see that it actually decreased as a percentage of room revenue. So therefore, hey, as I grow, I probably expect these costs to grow. The goal is that my fixed cost, my G&A, my overhead costs don't grow at the same rate that my rent revenue is growing. And so here we can see that that's the case. We increased revenue, our G&A costs increased, but not at the same rate. Therefore, this rate became lower. And so those are different things that I follow really closely with our clients. Payroll, I will tell you, for me personally, when I'm getting into a consulting role, somebody wants to come in, maybe they're preparing for a sale, or they're wanting, or we're providing them advisory services. I really look at 3 to 4 things right off the bat. One, a couple of them I've already talked about: revenue as a percentage of gross rents, my gross profit as a percentage of rents, again, year over year. Next thing is my G&A. Next thing, advertising and promotion. Here you can see this, this number was approaching 4%. My opinion, anything when you get above 2.5%, 3%, it's usually pretty hard to see returns on that advertising and promotion cost. And so, I'll typically challenge clients to understand, hey, what's your return on investment of your advertising and promotions, if that's getting over 2.5%. And then the other really big one is payroll. Here we see now, we actually don't have this broken out as well as I would like on a department basis, but you can see using departments within Sage Intacct, I'm able to break out all this data, break it out by department, and start to understand, hey, where, not only what is my payroll cost as a percentage of rent revenue, but what's my payroll by department as a percentage of revenue. So understanding that is really key. Where are you investing? Hey, have you had payroll really increase in one department versus the other? Why is that? Was it necessary? Are we under invested in one department from a payroll perspective versus another? So really understanding that. Here we see that, hey, payroll actually grew as a percentage of rent revenue. As I talked about earlier, hey, we'd really like to see those fixed costs stay, or not fixed costs, but our overhead costs decrease as a percentage of rent revenue over as we grow. So here we've increased. Really want to ask the question, why is that necessary? Am I overstaffed in different places? These other areas of different G&A certainly are things to pay attention to. Here we have credit cards charges down below and operating maintenance expenses. Typically, like I talked about earlier, I would want to actually put this up into a direct cost it helps us understand our gross profit better as opposed to having it down here. But then the other big item that is so key with clients is software. What are you spending money on from a software expense? It's so easy. You see so many shiny objects that people swear up and down it's going to save you time and money, and it sounds great. But before you know it, really that software cost can really balloon. So having that understanding your software cost. This is another one actually. It's really great to tag and break out by department. So for most of our clients, we'll work on understanding our software on a department by department basis. So some might be owner relations, might be just admin, might be guest services. All those repairs and maintenance, such as like a breezeway tool, all those different items, I'm going to really try to understand my software on a department by department basis. And so all that to get down to my net income as a percentage of revenue. So here we're wanting to see, hey, what is the what's my bottom line as a percentage of room revenue? Typically, we like to see clients in the 5 to 10% range. If you're hovering at 8% or over, you're really doing great. 10 to 15, fabulous. As you start to dip below there, we start to ask questions. Hey, where are there areas that we can save and cut back or grow revenue? One or the other. But a lot of times you'll find that, hey, cutting expenses is actually sometimes easier than growing revenue. But certainly, as you add to your portfolio and grow units, that's one way to grow revenue. But then again, understanding how that operating expenses are going to grow with that. So hopefully that dives in quite a bit into the nuance of what we look at with our clients. Within Sage Intacct, there's a lot of other things that become very valuable with our reporting. So here, we've actually taken this down to each individual listing and looked at their room revenue versus management revenue. So here, if we wanted to, we could actually add another column and do a percentage. What's our take rate as a percentage of room revenue charged to the guest on a per unit basis? Other things that can be useful, whether it is by whether it's multiple entities or whether it's different regions. So we might see, hey, how am I performing in Maryland versus Virginia? So we can use different tagging and roll up of units and revenue to start and allocating expenses to begin to understand how each individual region is performing versus my company as a whole. But certainly we can go more and more in depth, but hopefully that gives a good indication or a good overview of ways that we help clients understand their financials, the relationship between their financials and different statistical data, such as active units, such as room revenue collected, and looking at different trends using those ratios to understand your financials better. But I will see if there's any questions.
Thanks, Jesse. I see a question actually. What would you look for if you were trying to investigate, are there places where a company's losing revenue, revenue leakage? Like, what are some signs that you would look for?
Well, certainly you're, if you're looking at your ratios on a month-over-month basis, if you see changes in that, that is a pretty big indication. If all of a sudden, management commissions as a percentage of room revenue decreases significantly one month to the next, might be like, hey, my is something messed up. Usually that's not going to be the case. Things like that are um, uh, things like that are caught in owner statement review and collection. Um, there's two areas that I think are more likely that there's revenue leakage and or money going out the door that should be. One is, are you reconciling to the penny all of your reservations? Meaning, do you track your money in to the reservation? Do you reconcile to the Airbnb payout, your Stripe or other merchant processor payouts? Are you reconciling each one of those dollars, all of the resolutions, making sure that you're capturing those items and allocating them or deducting them from the owner? That more often than not is where we find people are. Marriott, for example, it's like a very terrible system. They don't have a good connection with any PMS, so the cash that you receive often doesn't match the revenue that's on a guest invoice within your PMS. And so, there's almost like this, manual adjustment that you just have to make to get from the reservation that flowed from Marriott to your PMS to the actual cash that you received on that reservation. And so that's an area where we really see all of a sudden, if you just take the PMS number and you haven't reconciled your cash, you end up actually paying out an owner on a revenue that where you didn't actually receive the cash. Other things that I've seen is, Airbnb all of a sudden withholding cash because something's wrong with your EIN or something, and people aren't reconciling their Airbnb payouts, and so all of a sudden, Airbnb is remitted, $100,000 to the IRS, and you've got to wait until you file your tax return to get that money back, and all of a sudden you have a cash flow problem. Other areas where we see revenue leakage is just, hey, what's your process for identifying and tracking your owner billable expenses? So there's a lot of different approaches to that, but I think my biggest I don't know, advice in that arena is that your team and your staff understand that that's a whole organization process. Everybody has a stake. And actually, this goes for finance and accounting across the board, that really everybody has a stake in the finance and accounting of the business. Too often, and we see this a lot, where clients, they come to us, they find accounting to be a disaster, they don't quite understand it. And so they're like, hey, I want Ximplifi to take care of this. And we can, and there's a lot we can do, but there really has to be this working relationship between finance and operations to understand the financial performance, track, and make sure that expenses are appropriately tagged, rebuild to the owners. And then it's revenue opportunities, right? Like, hey, am I marking up my maintenance? Am I billing my time? Am I deducting merchant fees from my owners, channel fees? That's another one that's a big one. Like, people end up, maybe they're not correctly deducting their channel fees before they pay their owners. They calculate management commissions. So, but a lot of looking at revenue leakage, quote unquote, is digging into the details on the cash that you're collecting from the guest, making sure that's reconciling that reconciles to the reservation data that you're putting on an owner statement, and eventually paying the owner.
Gotcha. Yeah, it's just trying to notice the differences and spot those irregularities.
All comes out cash rec.
Yeah. So how much of this is automated, would you say, in terms of like tagging all of these aspects of the financials? You showed getting it down to the listing level. How much of that is done by an accountant or someone in-house, and how much is automatically done?
Yeah, most things related to guest reservations and payments and payouts are all automated. So how much is my room revenue? How much is cleaning revenue? How much is taxes collected? Um, versus how much is our payments from recorded in the PMS versus the actual payout from Airbnb and Stripe. Most of those things are all posted automatically. And tagged automatically. Same with within our system, a lot of statistical data is posted automatically, such as number of turns, number of nights stayed. Active units is actually something that you manually change on a month-to-month basis, but pretty easy to do. And so, that's from the guest revenue side. Most of that is automated. Of course, the issue isn't the stuff that's regular, it's the irregular stuff. It's the Marriott situation that I just talked about, where cash doesn't quite reconcile to the reservation and guesting or your PMS, or you have a resolution that it was withheld and somehow needs to be tagged and reduced on an owner statement. Those things are manual. Weird refund and extensions of reservations. It's a lot of those fringe cases items that are manual, but they take up the most of the time, and those are the things where you have to track things closely. On the expense side, it all pretty much depends on what process you take as a team. Expenses are probably the least automated, but you can come up with some good processes to make it as easy as possible, such as folks use systems like TopKey or Ramp or Airbase. These systems were ones where you can use virtual cards, and you can create different cards that are specific for each different property. So now every time an expense hits that card, it's already tagged maybe to a specific account category and unit, and that can automate your spend tracking. But there's a lot to it, no matter which way you slice it. But we try to take as much of it and automate it as much as possible.
Awesome. Thank you. I think we had a couple more slides, so I'm going to take back the screen share. If anyone has questions, feel free to still post those in the Q&A. And we just wanted to show you a couple of the ways that Ximplifi can support your business if you need help on that expense coding side of things, or putting together these reports. So Jesse, I don't know if you wanted to kind of talk to anything on this slide.
Yeah, I mean, more than anything, our goal is that we'll use the technology that we talked about today to hopefully provide a lot of resources and reporting at your fingertips, using Sage Intacct and our automation. But beyond that, it's us offering our outsourced finance teams that can alleviate the day-to-day need to reconcile, worry about revenue leakage. Our teams are doing all of those, using all those best practices to put your mind at ease that that's not happening.
Yeah, definitely. So for anyone watching who wants to email us afterwards, has more questions, or wants to check out some more resources on Sage Intacct, feel free to take some information from this screen, and make sure to follow us on LinkedIn and Instagram. In case you're on those platforms, we're always sharing little tidbits and updates about upcoming webinars and events. Jesse will be at BRMA Executive Summit at the end of May. So if anyone out there is attending, we hope that you stop by our booth. And I think that wraps it up.
All right. Thanks, everybody.
Thanks, Jesse.
Bye-bye.
Have a great day, everyone.